What's up everyone, welcome back to another video here on the channel. Today I want to teach you some tips and tricks about reversals. I want to show you how to spot better reversals, how to analyze the market, and find out which reversals are likely to work or not work on the market. So something pretty useful for you here, and we'll dive right into the chart over here. First the theory, then we'll go on some live examples on the charts, and I want to show you how that works out. So there are three things I look at in terms of reversals: how to know which reversal will work, how to spot and accurately identify reversals in the Forex market or pretty much any market out there. Okay, so the first thing that's really crucial when we look at reversals is, everyone knows it, it's very basic, candlesticks. There's been books about them, there's been a lot of research on them, there's been a ton of people talking about them on YouTube. It's very easy to find, but if you can find the right candlestick patterns, we can spot very well some reversals. I've done videos on that in the past. I've done a video last week about how to trade the weekly chart and how I look at these reversal signs on the weekly chart. If you didn't watch this yet, go watch it. It's going to be linked in the corner over here. And you'll be able to see how I use these price action patterns to spot reversals in the Forex market. Now, the ones I like to look at the most are the engulfing and what you could call the pin bars or the hammers. Whenever you have something that's like this at the top of a range, okay, that's for me pretty good. Something like this, or it could be like a doji as well. So you could have something very small like this. Okay, these kind of sticks tend to work pretty well for me. These are kind of what I call myself pin bars. I know they have like some fancy names. You can call them whatever you prefer. But you know, the thing about candlestick is the name doesn't matter. What matters is the reaction and what it means for the buyers and the sellers in the market. So quick tip for you here, start trying to remember the names of candlestick. Understand what they mean in the market and what they show as reaction to buyers and sellers in the market. Much more important. These are my two favorite. Now the second thing we look at when you look at reversals is what move happens before the reversal. So how are we getting to the zone that you want to trade for reversal? There's support or resistance areas. How does price get there? Is it choppy or is it happening very, very fast? Price getting there super quick with big candlestick and getting to that zone. Okay. I'll show you examples on how that works. The key thing to remember here is that you don't want to have a price that's like too fast at the zone. If it's only bullish candlestick getting to the zone, it's likely to break out from that range and not likely to reverse. At the same time, if price is on very low volatility and moving like with small candlestick close to the zone over time, that's also not likely to work. So we could have, usually fast doesn't work. And as well, when you have very small candlesticks, that also doesn't work usually. And again, not too choppy. So choppy could be, what I mean by choppy is something like where you have price going to the zone in a manner like this with some pullbacks. Then this is likely to reverse quite well. I want to make it very clear here so that you can remember better after and you can take notes of this. If you have a screenshot of this, you can take a screenshot. That's good. So you can remember these things after. Once you get on the chart and once you get to your real trading after, of course. What you don't want is a market where price is going to be going down like this and very little candlestick, like very choppy over time. And then it's gonna go down here, but the candlesticks are so small compared to what you had before. Then it's just like gonna go straight to the zone and not even look back. Okay, it's gonna just go back like this. So you don't want these kinds of moves. These are moves where we can almost expect a breakout, but it's so choppy that it's really hard to trade a breakout in this case. Because price is always on low volatility and that doesn't work out well for most traders. Okay, so third thing we look at in terms of these reversals patterns is the fake breakout. Okay, you can call this fake breakout, false breakout, doesn't matter. Now, why do fake breakout make a good sign of reversal? It's very simple. It's because of the fact that whenever you have a fake breakout, traders are trapped. Okay, traders feel bad about this. So let's have a look at an example for just a theory here, and then we'll get to the chart after. Let's say you have a range like this, and then price goes within that range for a while. Okay, price is gonna go here, it's gonna go here, there. And then once price gets here, again at the resistance area, it's gonna go just over here like this. And then it's gonna maybe consolidate a little bit. Then it's gonna fall back down. Okay. So let's think about what happens when this kind of case happens in the market. Here you've got people who are ready to sell at a zone. They will sell. They expect price to go down, of course. And then once they see price not going down, the stop loss will be triggered here. That could cause a move that goes to the upside. Okay, and that's kind of what we see here with this false breakout. Now, what happens, let's just backtrack a little bit here. What happens when people see a breakout? The zone's been tested for many times in the past. traders online here that they have to trade support and resistance areas all the time. They hear about breakouts all the time. They see, oh, price breaking that zone, I gotta buy. They want to get in that move to the upside because they see price breaking out of a range that's been lasting for a very long time. So right here you've got plenty of buy orders that are triggered. Buy orders, and so on. You've got plenty of them. This range has been established for a long time before. This is nothing new. It's been there forever, possibly for months, for years sometimes, or even for a couple of days, depending on the time frame you trade. Now, when these people are getting long, they'll put a stop loss here, maybe just below the range. Okay, that's if they're smart. That's what most traders would look at. They put a stop loss there within the range to be safe. But then what happens if price stays there a little bit? Some people will say, oh, it's not moving, I'm gonna get out of the trade because price is just consolidating here, not moving in their direction at all. They're gonna get impatient, they will get out of the trade. So they have to put some sales, so price will go down. Now this is not the majority of people. This is a small percentage of people that will do that. Most people are just gonna stay in the market until their stop loss is hit. And then stop loss hit here when price fails to break out because not enough people jump in the move to the upside. And what that means is when these are all triggered, these stop orders are all triggered within the range that was there before, then it makes a huge lot of downward pressure, a huge lot of selling orders. When you take a buy and you gotta close it, that's a sell. So a lot of people are wanting to sell here. They're wanting to close their buy trades. So price will go down. Now this is a very good sign. If this happens, price will go further down within the range. Okay, so you can almost, in this case, what I like to do is I like to treat this as a new resistance again. And I would like to sell here and even possibly sell a few times within the range. Because we know that there's a lot of downward pressure now from the people that were going long at the top and failed to go long in that case. So this is all about understanding a little bit of psychology and how people react in the market whenever they get in and they fail or they have a trade that's going on and it has their stop loss. So you gotta understand this for sure. We've got our plan here. This is how we're gonna spot our reversals. This is how we can make them more accurate. Now let's look at some examples on the charts. I'll show you how in details what that looks like. And by the way, these are by no means like clear answer to reversals. Even if you put all these things in place, you'll have some losing trades and you have some times where you think it's gonna be a very good reversal, but it just doesn't happen. You gotta be willing to stay in the market, gotta be willing to keep trading over the long term and not risk too much on any of these trades, that's for sure. But let's begin by talking of candlesticks. One of my favorite topics here because I use a lot of candlesticks myself in my trading. It's something that makes a big difference for me. And I'm just going to take off here the Bollinger Band so you don't have to see what I'm trading. I've got a small indicator here that shows the engulfing candle with the Bollinger Band, so it's a mix of both. This arrow over here. Okay, this is more like a trending market, but price is in a range over here. And this is a daily chart, so we can look at this on any time frame. It's going to be the same thing. Then price breaks down of that range. Now we've got our support and resistance areas here we had in the past. This is our support that turned here to a resistance. See how price at this level makes a very nice engulfing candle. What this is bullish candle followed by a bearish candlestick that closes below the low of the previous one. The low is over here. This one closes below the low. Okay, we don't care about the wick after. We want to have ideally a small wick at the bottom. The wick at the top doesn't matter here because it shows that the sellers took control. The reason why it's so powerful is because it's showing a bullish move. The buyers are in control, they're pushing price higher, and then the sellers get in the market, they're pushing price below. They take control of the market right there. This is a battle won here by the sellers. So we know that the market is actually to go down. It's a very good sign of reversal. I use this myself a lot in my trading. But again, we've got plenty of them on the chart here, like one over here, but they need to align with some kind of zone. They need to align at the right place for a reversal. You cannot just trade them like anywhere you want. They need to be aligned to the right place. If they're in the middle of the zone like over here, it doesn't work. It's useless. So if they are at a support like over here or at a resistance, then that's good. Even over here, this is also one. This one also. So you've got plenty of moves here. We don't have a lot of room to go in that particular market. We got some very tight zones of actually 500 pips, not too bad. But these are good examples here in this market. Okay. Now let's see if we can find a couple of what I call pin bars in this market. Some places where price makes a nice sort of doji. This is actually one. This is also one. See here this bullish candlestick, still bullish, but we have a wick in the middle. And this is a nice pin bar that I would call, or more like a doji style. And what I would do here in that case is I would wait for a bearish candlestick to close below to enter the market. Here we have both an engulfing candle and a doji before that, so that works. But I would just want to wait because the doji is less reliable than an engulfing. I will wait to see the next candlestick. If the next candlestick is bullish or same direction and against our trade, I would not enter. But if it's a bearish one, at a resistance of course, then I would want to get in the market and short in that case. This is also one, see how the wick is big over here, so like a pin bar. Again, I would want to wait for a bearish candlestick just after, which is here also an engulfing candle. Pretty good. Let's see what else we have. Here we don't have zones written on our chart, but let's just go back a little bit. This is also a pretty good example here with, again, engulfing with it. So both things can happen together. We have examples also without engulfing candles. But in this particular case, we have a nice pin bar over here. This candle right here. Followed by, and then we want to wait for the bullish sign to enter. So we want to see if this candlestick here will be bullish because this is a support area over here. And in this case, it's a bullish candle. At the close, we could enter right away. And then we would be able to ride this trend that didn't last so long, but still pretty good. And here's another example. And this is not the kind of market you would want to enter, and we'll discuss why just after because of the choppiness here. But that could be an example. Here again, another one. We have our nice doji over here. This candlestick. We want to wait for the next candlestick, see if it's a bullish one. And yes, it's bullish. We could enter here at the close. And again, we get a pretty good move. A 1 or 2 to 1 observer twist. So pretty good. See, price went a lot beyond after. And that might be a better entry than the first one though. So because of the market circumstances and the choppiness here before. Speaking of which, let's discuss the market choppiness and what kind of moves we're looking at when we are going to look for reversals. Now here's an example on the same pair, Euro-CAD, and you'll kind of see what I mean when I say a choppy market or a fast market, here to look for reversals. Here we have a pretty good zone that's been a support for a while, and price always came back down here, and then went back up, then went back down, went back up, and so on many times in the past. Okay, here we've been at a range for quite a long time, of course. Went back up, went back down, and notice how price here reversed. Okay, we had a pretty strong move to the downside. Here we didn't have any, like very much of any reversal patterns. Okay, we went from here all the way down and no reversals pretty much until we had this sort of pause here in this consolidation. This is a very good sign of a reversal because price is consolidating a little bit, deciding if it should break out or not, and then it makes a decision to continue within the range over here. Now this is perfect because you can trade this very easily. Now you can look for buys or sell in this case, depending on how price breaks and some more confluence factors, of course. But good example here. Now let's see next time price goes and touch that zone again. Okay, again, here's another one. We get really fast toward the zone. This is kind of like a consolidation on a lower time frame. It's a big wick. So the buyers came in, the sellers took control over time. If we were to bring this on a 1 hour chart, or like a 15-minute chart, you'll see what I mean by a consolidation here. See how the price here went up and then paused a little bit, make this high, then came back down, and we kind of have a small consolidation here, which is a good sign of a reversal. But going back to our example over here in the past, let's see what happened when you get to our next reversal. Again, price here makes some nice wicks. That's a good sign of reversal. That's very nice. But here, look at how price goes back down again. Then right here we get a pullback, but then we are going straight back down. Okay, whenever you see something like this, you want to get out of the market. You see price trying to reverse, but then you get some big wicks over here. That is not a good sign. Okay, and then you see how price breaks this level. It's just small bearish candlesticks, nothing much, no reversal. Here we had a small reversal sign, then we're going against it with this bearish candlestick. And then price just like falls and falls and falls, okay, over time like this. So not a good sign here of any kind of reversal. You know we are not going to go back at the zone because of how the price moves. We have no wicks except this one over here, which is not confirmed. And then we have wicks in the opposite direction that are confirmed, okay, with price going back down. So we don't want to be trading something like this. This is not a good example. Now let's see a different pair. Let's see on USD CAD. I've discussed something like this in the past on my other video on trading the weekly chart. But see how USD CAD here reverses in this zone, goes back down to retest very strongly. We don't have any consolidation here or anything else. We just have a big move to the downside, but then we are taken back with the bars here. That's a good sign. So whenever you have a big move like without no hesitation from the sellers, and then it's reversed here by the buyers with a big candlestick, in this case an engulfing, then that's a very good sign to go with a reversal. Here again, a somewhat mixed move, going down, consolidation, which is a very good thing, very good sign here, and then we're going back up again after with an engulfing candle again, so pretty good. We also had an engulfing candle over here before, which is also pretty good. Now compare this to when price doesn't reverse. Okay, here's an example where price did reverse again. We were here at the bottom at this support, came at the top very strongly, pretty much no pullback here in this move, but then see how the sellers took control of the market in that occasion. And same thing here again. Here we came back more slightly in the middle, but then we had a small consolidation here, which if you look on the lower time frame, that would be a nice consolidation at this level before the buyers took control and went back up with the range. Now here we consolidated a little bit. See how we're getting really choppy. Price goes down. It's somewhat of a consolidation here in the middle of the range, which is a sign that we are preparing for something different in this market, because price is not consolidating here for no reason. It's either going to go one way or the other very strongly perhaps. Then price hits the zone, same zone we've been reversing before, but here we have no sign of reversal. Okay, we have just a bearish candlestick going back down, and price goes here again. Now this could be a false breakout, of course, but see how it's not confirmed because of the fact that price doesn't go back within the range. All the stop of this move here to the breakout are probably all here beyond this candlestick. Okay, this is a bearish candlestick with a wick. People always place a stop here at the wick to be safe when you have a breakout. So if price were to go back and hit here, I'm pretty sure price will go back up. But if price stays here and doesn't go beyond this wick, then we're pretty safe. Okay, we have some stuff over here. Of course, we have some more over here that are safer. This is where people will put their stop when they sell at this breakout here. But because it's not reversed, because price just fails there, then that's a sign of a not reversal of a breakout in this case. Now you understand more how that kind of works out when you have the price that's going strongly in the zone, but then shows a sign of reversal. That's a good thing. Getting back here to our theory, because this is the example over here, which we had. Price goes down strongly, but then reverses with a nice consolidation or a big move from the market. Okay, a big candlestick that's reversing the move in this case. Or here when you have a price that's more choppy, but we have a nice consolidation here at the bottom. Very good sign again. We don't want to have something like this where price just goes through the zone, doesn't show any sign or show signs of reversals that fail because price doesn't go with the favor of the sign. That is not a good thing, of course. You don't want to be trading here. That would get you in a lot of bad trades in this case. Now, fake breakouts. Let's discuss this now. And for this, I'm going to go on a slightly bigger time frame. Let's do a daily chart on USDJPY. It's a pair that's consolidating here a lot usually. Actually, you know, one of the pairs that's really good here for false breakout is the Euro USD. You get a lot of moves here that are seeming to happen. They're like very good, very right place, the right zone, but then price does a fake breakout. Happens a lot in this pair. So let's see how this turns out. Euro USD, I'm on a weekly chart. We might go on a daily chart later to kind of look at this better. But see how here between 2015 and I guess the end of the zone here, for actually a long time, here even 2016, 17, we've been in this range here for a while. Okay, I'm just gonna go and draw this over here. I'm gonna extend this line over here. Maybe it goes a little bit higher. You get price that is within this range. Okay, it's always going back and forth, always coming up, always going up, coming back down, going up, coming back down. And see how we can, and this is what happens if we don't spot a weekly chart. On a weekly chart, it's more clear that we have this, but on a daily chart, it looks a lot more scary here in that case. We'll go back a little bit. Okay, so this is what our range here looks like. When there's this range, price going back and forth for a couple of years in this particular range. Now we see here price goes back here. Good opportunity to buy with the single fin candle. Okay, now you want to be careful where you put your stop loss because this pair is very good for fake breakout. And here we go. Here price goes back at the zone again in 2017, but then we get this break. Now let's think for a second. Okay, where would people trade this breakout? How would they trade this breakout? Well, we've got people who would wait for a break of the zone here. This is 1.05. It's a very good round number. So very nice place to look for a breakout. Probably like somewhere around here. They see 1.05 is broken, price going down. They will sell here. Where would they put their stop loss? Well, either here, that's the first place, or maybe if they're like very safe over here, So then they have a stop loss that's very good, and they would aim for like maybe a 2 to 1, 3 to 1, or so on. Okay, so let's just draw our target over here. That's the view of people who are looking for a breakout in this example. All right, so stop loss over here. They know that if price goes back within the range, they will be losing money, so they want to get out of the trade. And that's what you see in like all textbook anyway about how to trade breakouts. What happens? They get short over here. Now they see price goes here. Okay, in their favor, they're happy. In their favor again. Oh, price pulls back a little bit more. It's back to their entry. Oh, in their favor again, they're happy. Oh, it's good. They're going in their favor. But then here, just before that, price hits their stop loss. So they get stopped out. And then again, price goes all the way to here. Not quite the stop loss yet. Okay, we still have some room here, but price goes a long way. We've got people who want to go long within this market here. And now see how price just after this fails and then goes back to hit this level over here again later. Okay, now all these guys who went short here, unless they had a stop loss over here, they're all out of their trade. They all had to take a buy to cover their loss in this case. This puts a lot of buy pressure in the market in this example over here. And then as you can see, price goes here. Usually it's going to make a small pullback over here. So we have a nice pullback here to the zone, which is a very good place to go long in the market, to buy. Because the fact that this becomes again our support in this case. It was a support before over here. It becomes a support here again in this market. Then price, as you can see, goes right up within the range again, and even goes back to hit this high over here. Okay, 1.16 that we were at before. Now here we have a pretty good case of a breakout with no sign of reversal at all in the market. So you want to be careful of this, but this is like a very good example of a false breakout. And then the buyers stepping in, the people going short getting stopped out, the buyers stepping in, and we have a very nice move here in this market. So this is something you can trade. Works out really well, but you want to be able to know like the psychology behind it. But you want to be able to know the psychology behind it to be able to trade this properly. Other example, let's go on a random pair, GBP CAD. Here we go. Let's have a look at a different chart. We don't have any drawings on it. And let's try to spot a false breakout. Okay, we still have this range. That's pretty good. Pretty good. That's a bit choppy here. This one is amazing. Let's have a look at this. 2020, 1.68 is our support here in this market. At 1.68, here we go. Perfect. Our support is here. We have a nice range. Or resistance is going to be over here. 1.70. Put this straight. 1.76. Cool. All right. See how price goes in this range for a long time. This is around, more than 1 year in this example. And price always respect these levels properly. Okay, maybe like a small break here occasionally or some kind of wick, but that's normal. People won't get short for that. That's okay. Until price gets over here. And notice how price is always reversed here by very strong candlestick patterns. Okay, so here bullish engulfing. Here in the past, we've got a nice wick, some kind of pin bar with another pin bar confirming here after. Then another here, big bearish candle confirming the move back down. But then we get to here where price is partly breaking out of the range. Now think about like how would people trade the breakout here? Well, what would be the play, the strategy here in this example? Textbook style is when you have a break of the range, when price goes beyond the high with the wicks over here. So we have a wick. Again, for sure we have some wicks here that are a little bit beyond, but let's see people here going long because they see this wick here in the past. They want to go in the market. They think it's going to break out. So they would, of course, ideally want to go long after this candlestick over here whenever they see breakout. Okay, people who are very aggressive want to get in like right here. They see, oh, price breaks out of the range. I'm going to go long here. Their stop loss will go probably, let's say here, below this low. If they're very conservative, yeah, sure here, but that's not most people. That would be a very big risk for potentially small reward. So let's go for here. And see price in their favor, it goes up, they're happy. Price here goes back to break even. That's when they start to panic. Okay, because now they lost all their profit. They had maybe like a 1-to-1 here. They didn't close it, so too bad for them. Okay, price goes back within the range. See, here they're stopped out. Okay, so we are now having a lot of pressure from the sellers in this market. And even though like this is not as big as the other one before because we had a lot of wicks here in the past. Okay, see how, sure we had a false breakout, but we still have some wicks here that price kind of didn't really go far beyond. So all the traders who will go in the regular breakout, they might want to wait for this wick to be clear here. to go long, and then they might want to even wait for this to be clear to go long, but that's like way too high, so forget about it. They might want to wait for this one here to be clear, this wick over here, 1.78 in this example. So it was clear, but we have a lot less people in this market compared to the example before on Euro USD. But still, same principle applies. People here are getting stopped out, a lot of pressure from the sellers. We're going back within the range, and let's see how I can trade this. So we got a move back down. Okay, we're going back here. We're testing again the resistance area with this nice bearish engulfing candle. You could go short here. I personally will go short right away here. If I want to be safe, I'll put my stop loss here. If not, I'll just put here at the top of the engulfing candle. And we go back down right here, and so on. And very good trade here in this example. Can you see how this is very powerful? Most people want to look for breakout because it's really exciting. They go with the trend, they go with the flow, but there's a lot of possibilities going against the trend, against the breakout in this case. You wait for traders to be trapped, and that makes for very good reversals. Let me know in the comment section below what is your thoughts on this, what you prefer, what's your favorite tip in this video. I want to hear your thoughts in the comment section for sure below. If you like this kind of video, give it a like. Also share it with some friends if you can. That would be awesome for them to get some value, get some more tips about reversals. I'll keep doing those for free if you guys want. I'm happy to teach you stuff like this on YouTube all the time. Let me know in the comment section below as always if you like these videos and what's your favorite tip of this one. And I'll catch you back here in the next video pretty soon. Ciao.